In the past couple of years, I helped B2B SaaS founders book over 5,000 product demos in different niches. And in this video, I'll share the key insights which you can apply for booking more demos and filling your own pipeline. Some startups were selling lower ticket products between $200 and $400 a month, and they went from averaging 20 to 30 demos a week to landing 160 to 140 demos a month using the systems I'll be sharing here with you. Vast majority were doing mid-market sales between $500 and $3K a month, and some were doing enterprise sales where each qualified call meant a 6 to 7 figure opportunity. So interestingly, the top 10 fastest growing startups I worked with contribute to nearly half of all these 5,000 bookings, because I got the founder Jose from 0 to 30 demos a week in the first 2 months of us working together.
So this is this week. This is past week. This is 2 weeks before. And 4 weeks before. One more, sorry. And this is next week so far.
Wait,
And
so this week you got 20 demos?
17 more or less, 17, 20, yeah.
And we're 2 weeks doing this?
Yes. Yeah.
I think it's pretty nice.
Yes, it's crazy.
And even without pushing more budget into ads, this system has been delivering him 20 to 30 demos a week for over half a year now. His product allows property management companies and homeowners associations manage finances and tenant relations, which is quite an interesting niche for me. And he's been targeting Spain and Latin America with it. My other client, Ilya, alone has booked over 700 demos by now with this system, since he only occasionally fell under 20 bookings a week in the last 1.5 years. Most came for his cold email infrastructure software, and many recent ones into his tool for AI search engine optimization. And here's the screenshot of his calendar. Most came for his cold email infrastructure software. And look, the volume of your pipeline depends on these following factors: how strong your offer is, how much traffic you are driving to it, how underserved or saturated your market is, and how well you convert your interest into demos. So let me show you how this impacts your sales one by one, starting with your offer. So not going to surprise you by saying that great offers make more money. Everyone knows that. But how do you get this part right? Strong offer means your value proposition directly meets the market demand. Weak offer means it doesn't. So the entry-level way for getting this part right is studying what your top 10 competitors are doing and landing somewhere in between. It's performing great for them, so this way you at least don't mess it up too much, and if it's working in the market already, means you should be getting some meetings for your solution the same way too. But to gain a competitive edge, you got to go a step further. So what you want to do for that is you want to study your sales calls. Here's an extremely underutilized strategy your lazy competitors aren't doing. Take your last 50 demos, load all of them into ChatGPT, study objections and signals of how the prospects explained what they wanted in their own words, and what specifically were they saying when they were describing their pain and dream outcome. If you aren't closing at least 2 out of 10 qualified prospects, that means there is a serious gap here. And if you offer them exactly what they wanted, that's when your booking rates go through the roof. So this works even at low traffic, even in a saturated market, and even when your funnel is half broken. Because a great example here is if you send me 100K and nothing is required from my side to receive it, but the catch is I got to send you a physical mail, screw that, I'll go to that post office because a great offer is just worth it. That's how you know about these billion-dollar companies who have ugly websites and a 7-day reply time, yet they're still printing so much money. They offer an unreplaceable painkiller to wealthy buyers. You can mess up a lot, but still make fortunes if you nail the offer step. Just recall how creepy Amazon's UX and UI is, like looking at this picture. But offering the cheapest products and the largest stock, they are worth 2.4 trillion. And now you get it. So the second step is the traffic, because from all the startups I worked with over the years, I noticed a very strange pattern that, especially it's popular and common among founders who are under 20, under 10K MRR, that they really underestimate how many eyeballs they need to be getting to their offer for them to really scale their startup. Because at the start, especially when you're figuring out who is exactly the type of buyer you need to get in front of, this means you rather get more traffic than you estimate rather than you get too little. Because at the start, you're not sure about your ICP, you're not completely dialed in terms of your offering, and you still need to answer all those questions. This means you really need to worry how you get a ton of traffic into your solution. Now, let me break this one down. Even a perfect offer doesn't get you anywhere if it's not shown to enough people. So you need to get traffic into it, and most common channels are cold email, LinkedIn, meta ads, etc. My favorite one currently is meta ads, because you only need to make it work once, and then you can scale it infinitely in a predictable way. And that's why for the last more than a year, and I think soon going to be 2 years, I've been primarily helping B2B SaaS founders scale with ads, and most particularly meta ads, because, well, some people keep thinking that they don't work. I'm helping clients get between 50 and a couple hundred meetings a week just with them. You won't believe how many founders I met who were working on a great product, had a decent offer in place, but then had no clue why they were sitting at just 1 or 2 demos a week, while less than 50 people in a week were even hearing about their existence. So look, the stronger your offer is, the less traffic you need to convert calls. The worse your offer is, the more traffic you need. However, still, you can't be expecting results without getting anyone to hear about your solution and see your value proposition. It's funny how many times I met entrepreneurs who had an okay value proposition in a saturated market and scaled to 6 to multi-six figures a month by driving tens of thousands of impressions into it weekly. And here's the rule of thumb for you. It's much harder to sit around melancholically with an empty calendar when 2,000 relevant prospects are seeing your offer every single day. That's just the reality. Whether these 2,000 are coming from content, called outbound, or from ads. Again, the reason I love ads is because we know how much these 2,000 impressions will cost us. And from there, we can reverse engineer everything else, because 2,000 impressions means we get 50 clicks, we know that we get 3 bookings, and we get 1 sale. And of course, this number is very depending on the type of solution you're selling. And we're not constantly fighting platform restrictions like with outbound, or hoping the algorithm will get us viral like with content, because I've been posting on Twitter for years, then they changed the algorithm, and then suddenly my posts are only getting seen by a couple hundred people, while they used to be getting a reach of 5 to 20,000 people. And sure, you may call everything content related a skill issue, but then just why worry about algorithm updates if you can just make the system of ads work for you and rely on this predictable acquisition for years and years to come? The third thing you need to consider is market saturation. And this is really important when you're trying to understand how to get more meetings into your calendar. When launching my first startups, I was inspired by blue ocean ideology and thought I should stay away from markets which already exist. Fast forward many years later, what a stupid idea that was. Before you shoot for $1 billion company in a blue ocean with one of your first businesses, I strongly recommend building a 10 mil or 100 mil company first. Lol. One, you can build such in any existing market with enough TAM. And second, you can shoot for building a unicorn at any time later if you still want to build one. Anyways, here's why it's critical to understand market saturation when you want to book your next 1,000 sales calls. If there are already successful players in your niche, the only way you win is through offer and traffic. Positioning plays also a huge part here, but I included into the offer part here. It's ironical how many people I met who entered an insanely saturated niche, say AI chatbots, barely got 2,000 relevant prospects to see their offer in months, and were blaming bad economy for them sitting with like 3 calls a week. They would, for example, get into AI chatbots niche, or let's say selling software to Shopify stores or e-commerce, which are one of the most highly targeted niches there are. And then they would spend a couple $100 or a couple $1,000 on ads and be like, ads don't work. Look, nothing to say here, because why I'm saying that the market saturation level matters so much. The reason I'm saying why market saturation level matters so much is because when you set KPIs for your campaigns, you really need to be thinking how many other people are trying to get and fight for the same eyeballs. If, let's say, you're going to be selling, brokering private jets, you may get away by sending fewer cold emails, comparing with you trying to sell a Shopify store extension. With that one, you'd need to be in tens of thousands of emails for you to start getting initial traction. So one of the fastest growing startups I worked with has been a solution in food sustainability space. Big factor in their traction was them capturing significant market share weeks after there was a specific food sustainability regulation passed by EU. They had been in this space for a while and they saw it coming. So long story short, large and very large food companies were now obliged to also collect and report certain ABC data. And paying consulting companies to do that meant spending 200 to 300K in fees. So the founder hit a crucial timing for shipping his software, which delivered the same outcome, collecting and reporting that data, but automatically and with zero probability of human error. That's how, without having a much stronger offer than competitors or having significant traffic, comparing to my other clients selling at like similar price tag, this startup quickly filled their calendar once we started working on their go-to-market strategy. Me and the founder agreed that this success had a lot to do with them selling an unreplaceable must-have to a very underserved niche at the right timing. By the way, in case you were wondering how some founders are growing by millions in ARR a year, while others need to provide discounts for their $199 a month plans, look, this startup's deal sizes has been 20 to 30K a year, which is just 10% of the closest alternative, or is just 1% of the legal fees the company would need to pay if this thing is ignored. Were there other providers in the market? Sure, they appeared soon enough, but capturing an underserved, wealthy market with just okay level traffic let them get significant market share early on. And now coming to the last part, which you need to get to work for you to start getting an extra 10, 20, or 50 demos every single week, which many of my clients have used, is improving how you convert your interest. So this one is about removing all the leaks in your funnel. Well, in the end, if your book a demo button is broken, nothing above is gonna really save you. Most popular bottlenecks I fixed which led to the most impact are the following. At the top of funnel, it was fixing the bad offer, fixing a bad creative, or fixing bad outreach message. If these are off, you can be spending and burning tens of thousands of dollars on ads, or you can be sending tens of thousands of emails and still not be getting significant traction and wondering why are things so hard for you. I'm telling you, if you nail the offer part and get enough traffic into it, things just start going tremendously differently. Now, the mid of funnel part, the things which I fixed the most, which led to the most impact, were weak sales decks and videos. And the other one is slow and ineffective booking processes. So in this one, I want to share one crazy story with you. This one comes from an ops advisor in my network and is a good example of how this part number 4 can make tremendous impact. My ops advisor friend starts working with this company doing 5 mil a year. He breaks down their processes and starts analyzing where they are losing their money. They have 30 sales reps on their team, and turns out that SDRs were taking between 6 and 24 hours on average to get back to their inbound leads that were coming from ads and content. My friend knew that he found a hidden gold mine when he saw that. He helped them implement a new process, and now all inbound leads got contacted within 3 minutes. Of course, you can imagine that the reaction from the sales team was very, very mixed, because for the corporate types, well, as I'm writing here, it led to the full meltdown. But after the CEO pushed this change, within the next year, the company went from 5 to 9 million, and this surpassed all the revenue projections that they were setting for that upcoming year. I think back then it was for them to go from 5 to 6.5 or something, but they just gone up so much higher. So the steps that will get you not just one, but multiple full calendars of demos are the following. So you want to introduce a strong offer which directly meets the market demand. Then you drive massive traffic into it. Thirdly, you need to consider your market saturation level when evaluating results of your campaigns and find gaps for launching additional products to wealthy, significantly underserved markets. Here, two things. One, my client selling enterprise telecom software was extremely happy to hit 5 SQLs a week to his solution, which was 200K. At the same time, tool for realtors had to aim 10 times higher in terms of the booking volume. So again, depending on your business model, this plays a part. Secondly, even if your main offer is not aimed towards an underserved wealthy demographic, who knows, maybe you launched your startup a couple of years ago and you still didn't know all the things back then, doesn't mean you can't launch additional products to land a few high-ticket contracts to fuel your growth. Even if, let's say, you're not selling your key primary offer to this wealthy underserved demographic, again, you may launch additional products so you can increase your offer stack and get additional cash flow for yourself. And lastly, you want to maximize your interest to call conversion to make the most out of it. And I'm telling you, if you follow this, it just becomes physically impossible for you not to substantially grow your pipeline and sales. I broke down more examples of how I implemented this with clients inside my Telegram channel. And if you want my help and my advisory on executing all of this to make sure that your pipeline is not empty and that you're adding like 10, 20 or 100 meetings every single week, then go to saascamp.com and apply there. Appreciate you watching this one and talk soon.